In India, gold is so much more than just an investment. It's woven into the fabric of family, tradition, and most importantly, security. And one company, Muthoot Finance, figured this out better than anyone else and built an absolute empire on it. But the real question is this golden giant a fortress for investors, or is it just a house of cards? Let's dig in.
To get a sense of just how big these guys are, look at this number. Almost 5,000. That's how many branches Muthoot Finance has dotted all across India. I mean, that's more locations than a lot of major banks have. This incredible physical network has made them a household name. That trusted lender you can find in pretty much any corner of the country. And that brings us right to the heart of it. For investors looking at this company, is it a golden opportunity or is it actually a really risky bet? We're going to unpack the whole story, the bull case, the bear case, and try to figure out what the future might hold for this gold loan king.
At its core, Muthoot's business model is just brilliantly simple. They operate in this massive, massive market, giving out secured loans against something that almost every single Indian family owns, gold jewelry.
You see, for millions of people, a gold loan is the fastest and honestly the most dignified way to get cash when you need it, whether it's for an emergency, a small business, or a family wedding. It's a lifeline. And Muthoot, well, they're the biggest provider out there.
So, to really get why investors have been so bullish on this company, you have to see how it acts under extreme pressure. So, let's rewind the clock a bit, back to a time when Muthoot faced a crisis that, frankly, could have wiped them off the map.
The year was 2013, and it was the absolute perfect storm. The company got slammed by two huge crises at the exact same time. It was a combo that could have easily destroyed a lesser business.
So first, gold prices just tanked, which hammered the value of all their collateral. And then, as if that wasn't enough, the Reserve Bank of India hit them with new regulations that made it way harder to lend money. But here's the thing. Muthoot navigated this chaos brilliantly. They kept their losses low, and, this is the crucial part, their customers stuck with them.
And here is the real kicker. Even during the absolute worst of times, Muthoot still managed a return on equity of 15%. Now, to put that into perspective, there are a lot of banks that can't even hit that number in a booming economy. That right there is resilience.
But, it wasn't all smooth sailing. Just a couple of years later, around 2015, some pretty skeptical investors started raising some serious red flags about the company's governance.
On popular investment forums like Value Picker, this whole list of concerns started popping up. Critics were pointing at everything from what they called high promoter salaries and brand royalties to some really questionable stuff, like using pirated software and shady fund transfers between different group companies.
And the feeling from the bears was strong. This quote from one of the forum members really captures that vibe perfectly. Just a deep, deep skepticism about whether the company was actually being run for the benefit of all its shareholders.
So, were these concerns legit? Well, this is where it gets interesting. Other members on that very same forum decided, hey, let's not just take this at face value. Let's dig into the numbers and see what's really going on. And here's what they found.
Okay, first things first, and this is a crucial clarification. It turns out there are actually two huge competing Muthoot companies run by totally different branches of the same family. And as people started digging, they realized that a lot of those governance concerns were actually aimed at the unlisted competitor, Muthoot Fincorp, not the publicly traded Muthoot Finance that everyone was analyzing.
And this slide on executive pay just says it all. The perception, the rumor, was that salaries were eating up 6 to 7% of the profits. But when you look at the company's own annual report from that year, the reality, it was less than 1%. I mean, that's a huge, huge difference.
All right, let's fast forward to today. That whole governance debate has mostly quieted down, but a brand new challenge has popped up in its place, really intense competition from big banks and other major financial players.
Yeah, the success of the gold loan market has not gone unnoticed. All of a sudden, you've got these major financial institutions with their stellar credit ratings and super deep pockets jumping into the game, all trying to grab a piece of Muthoot's pie.
So how's management reacting? Are they panicking? Well, not exactly. The company's managing director basically said on a recent earnings call that they've seen this movie before. Competitors rush in. They realize the business is way harder than it looks, and then they quietly back out.
And you know what? The data seems to back up that confidence. Just look at this chart.
Even with all this new competition swirling around, Muthoot is consistently adding over 400,000 new customers every single quarter. That's more than 1.5 million new customers a year. Their core business is just incredibly strong.
But the company isn't just sitting back and relying on its history. Nope, they're actively modernizing to make sure they stay ahead of the curve, and their latest annual report gives us a pretty cool glimpse into what that future looks like.
Let's be clear, this is not your grandfather's old lending company anymore. They're pouring money into an advanced digital strategy with AI chatbots and video verification. They're using sophisticated analytics for risk management. They're even building up their ESG credentials with things like solar power, signaling to a whole new generation of investors that they're a modern, responsible company.
So that brings us to the final, big question. We've seen a company that is incredibly resilient. It's survived major crises, it's fought off governance concerns, and now it's staring down a digital future. For decades, those thousands of branches were Muthoot's unbeatable advantage. But as India becomes more and more digital, could that massive physical footprint become a liability? Or will their unique blend of old-school trust, new-school technology, and that personal touchpoint prove to be the winning formula? The answer to that is going to define the next chapter for India's gold loan king.